Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
Well, one area apparently to keep score of this earnings season is the 3D printing area. And Eric Dutram, who is the editor of Zach's Surprise Trader, is here to tell us exactly why. You've got a couple of what were real popular 3D printing companies, starting with 3D.
Yeah, we got
3D Systems.
3D Systems, and Stratasys is the other one, SSYS, the symbol there.
Yeah.
This was an area that was really popular with investors maybe 2 or 3 years ago.
Yeah.
It was something every investor thought was going to be a big growth area, a huge sort of a revolution in manufacturing, if you will.
Mm-hmm.
But if we look to the recent chart here, we can see that the performance has been downright awful for both the companies, both these kind of bellwethers of the space.
Yeah.
The green line right here is Stratasys, and the black line is 3D Systems. And as we can see, both of these companies had a really awful last 12 months here. Mm-hmm. Both have lost more than 30% on the year, and that's pretty awful compared to even the broader benchmarks. We can see the S&P 500 barely was over break even over the last 12 months, and the Russell, which is probably a better benchmark to compare these small caps to, Russell lost about 6.5% over the last 12 months. Mm-hmm. So horrendous performance, but as we can see, there's been a little bit of a shift in thinking over the last couple months. We can see both of these companies sort of going from almost an 80% loss down to only a 35% loss now.
Wow.
So still pretty bad, but it seems like there might be some life in some of these companies, at least right now.
Like we were talking before we came on here, it surprises me that for the whole year 2015, their earnings and sales were disappointing because the technology is being applied across a broad swath of industries.
Definitely. I think this is an area where expectations might have run out a little ahead of the technology. It is being used a lot more, but maybe not quite as much as people initially thought. If we actually look at the 3D Systems chart that we have up right here, mm-hmm. we can see, basically the trend that you're talking about back in 2013, early 2014. That this was really a hot stock, almost at $100 a share back in late 2013, 2014. But we can see from that point, there's a series of disappointing results. 5 straight earnings misses, weaker growth numbers, and we can see that estimates really came down across the board for 2015 and 2016 with these consensus estimates. Now, as you'll notice, we've seen some green shoots here in the last couple months. We can see the consensus starting to tick back a little bit higher. They did have an earnings beat in the previous quarter, so a little bit better trend here for 3D Systems. We do have a number 2 rank on this stock. That's a buy. We're looking for a loss of 1 cent a share for this coming quarter, and the company reports on Thursday. We do not have a earnings ESP on this one, so it's not really a great metric, but it does appear that maybe we have finally at a bottom for some of these 3D printing stocks.
Yeah, and Thursday is May the 5th, right?
Yes.
So would it sound too corny if I said copy that?
It would be.
Probably would.
It would.
Okay.
But we will replicate that with SSYS. That's the other company to talk about. It's a pretty similar chart we can see here. They might have gone even a little bit higher. 130 was probably the high water mark for SSYS. Shares really fell apart, though, down to about 15, 16 over the next year and a half. Once again, we can see a little bit better trend on the estimate track. This actually is a Zach's rank number 1. It's a strong buy right now. We're looking for 15 cents a share in losses for this company this quarter. This company reports next week. It's Monday, so 1 week from today. I think that's the 9th, mm-hmm. Before the bell. So there's a little bit more time for this one. It's a pretty similar story to 3D Systems. It's really more of a long-term play on both these companies. It's really, can you wait out the volatility in both these names and sort of brace for any potential earnings impacts. We can see that, both these, they did have a lot of potential back, a couple of years ago. Investors really are going to want to see some better results before bidding up these stocks to these levels once again. And just for full disclosure, I do have some shares of SSYS in a longer-term portfolio.
Okay, well, thanks for that. And don't forget, check out more earnings information on our website, Zachs.com. If you're not there already, just link to it all right off the homepage. With Eric, I'm Terry Ruffalo.